Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group.
Hello and welcome back to Kitco Mining with me, Paul Harris. We're here at Mines and Money in London. And today I'm joined by Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company. Good morning, Christopher.
Good morning.
Excellent. With day 3 of the event here, it's been a good event so far. Let's start off talking generally about Hallgarten. Who are you and what do you do?
We produce independent mining research. We produce estimates on where we think major metals are going, major and specialty metals, minor metals as well. And that's our main focus. Raising issues in the mining industry, kicking some of the sacred cows. That's what we do.
Well, it sounds like we're going to have an interesting conversation. What have been some of the sort of key highlights and lowlights of the year for you?
Of the year? It's been a pretty grim year for the mining sector. In theory, stock prices are down a lot, but if you look at the gold price and you go to any gold company and they'll be moaning about it. But for a gold price, it's basically been above 1,700 for the whole year. There's only one other year, I think, in history where it's been that high. So do they really have grounds to complain? Their stock prices may be down a lot, but then you look at some of their bottom lines, particularly the producers, and you see that they've been not improving the bottom lines. They haven't been improving their margins, haven't been working on issues to get money out to the investors. Many companies are still not paying a dividend, and yet they're producers. So can they really complain about the gold price being over 1,700? And look at the silver price, nearly 20. It's been virtually a decade under 12. Is that bad? It looks like a great market for me for precious metals.
But it sounds like, from what you see, it's not really coming through to the investors because, as you said, not everybody's paying dividends. Share prices have been really hit this year. Yeah,
and definitely crypto issues have stolen some of the clothing from the precious metals space. We have two of the major factors that are traditionally attributed to making demand for precious metals, which are inflation, which is romping at a level that has not been seen since the 1970s. And we also have international instability with, even the threat of nukes being thrown around. These are the type of issues that traditionally light a fire under precious metals, and issues that we haven't seen for decades. And yet, blah.
Interesting you sort of mentioned crypto. I mean, crypto's had a really, really volatile year. Really up and down, Bitcoin. Most recently, a huge collapse of a crypto exchange. Are crypto, I hate to use the word investors, are people that put their money in crypto now starting to really realize the risks and volatility there? Will they start to migrate more towards hard assets such as the precious metals?
I think it's been a wake-up moment for a few people. But there's still so many card-carrying fans out there who do not realize the vulnerability of that space. The potential for fraud is massive, and it's just starting to become clear. And we've got, one major example and a few minor examples so far. But, except for Bitcoin in its original format, most of these other creations are the brainchildren of individuals and economic financial groups. And, the temptation when it gets so large for people who aren't mainstream financial players to embezzle or badly manage. That's all they need to do. They don't need to embezzle the money. They just badly manage their crypto exchanges or the cryptocurrencies. The wheels can fall off, and it has then a cascade effect.
Okay, so 2022 has been a tough year for investors.
Yes.
What has been the company's advice to the investors you speak to throughout these turbulent times?
Oh, to hang in there. Definitely with precious metals, the price is not bad, as I said. The base metals are not as good as they've been in the last 2 years, but they're definitely way better than they were for the last 10 years. The price of zinc was, down in the 60 cent range per pound, and it's still, double that. At current levels. So, many of the metals have given back territory, but they're poised for a move up again because, the dynamics of shortage are still there.
Well, I'm just going to ask you about that. As we head into 2023, how do you see the setup for the precious and base metals?
For precious metals, I think it's good. We have this pivot away from crypto. I think we're already starting to see it, not in the metals prices, but in the stock prices. So, it was more like people were dumping their stocks to buy crypto. And now the crypto's, got some question marks over it. They're sort of coming back in or, diversifying their portfolio again. Many people will say, I'm going to get rid of precious altogether and move on. As for the base metals, they are very much linked to global economies, and the global economy is looking pretty sick these days. Recession is the word on everyone's lips, and it's not going to go away. And it's only just begun, particularly in areas like the construction sector. I think there's a big potential with higher interest rates for longer to actually pull the rug from under the construction sector and the housing sector all around the world. And that, of course, means lower demand for structural metals and metals that, basically, feed into that, whether it's, making refrigerators or whatever.
Okay, now we're at the Mines and Money event. The label of the event is Resourcing Tomorrow, and that's very much talking to energy transition, decarbonisation, and the metals that humanity, the world needs for that. Will that compensate for some of the shrinkage that you're talking about there in sort of construction?
Well, it has compensated already. The question is whether hard-pressed consumers are going to be, peeling off money, going out and getting debt, taking on debt to buy EVs and replace their existing vehicles. Now, the governments around the world have put the gun against the head of the car owners and said, well, by a certain date, you need to do this. In London in particular, we've seen, very aggressive moves against older models of cars. But the consumers will maybe just not buy the EVs, particularly if they're not in a position to fork out the money. And EVs, frankly, cost a lot more than ICE vehicles.
Okay, so how, a lot of sort of the big consulting groups are talking about, a copper supply deficit, a structural deficit is coming and it's going to grow and grow and grow. So it seems the only thing that can potentially give there is that the copper price will go higher. Do you see sort of the copper price coiling ready for a big leap upwards?
I see it coiling for a gradual rise rather than any great leap. The problem for the copper space is that mega mines aren't coming on. The Chilean industry is sort of like peaked, and the Chilean industry has a lot of questions over it raised by government changes there. And there are new sort of mid-sized mines. I think we're going from the age of the brontosauruses in the copper industry into more sort of medium-sized dinosaurs, and they're going to be the new feature in the copper industry. Whether there'll be enough of these, though, that is another issue, because the large mines were owned by Codelcos, the BHPs, the Rio Tintos, mega economic groupings. Many of these companies don't want to own mid-sized mines, but if the future is going to be mid-sized mines and the majors aren't doing it, then the capital markets have to fund the mid-sized companies. And as we can see, many of these companies have been severely beaten back by the falls in the commodity prices, but they've also, the capital markets to a certain degree have said, no, well, we don't want to commit at the moment to these. So you've got this sort of gap between, potential demand. You've got projects out there. Can they get the funding? And that is a big question.
So what do you think that will do to the incentive price for copper to build new mines?
The price is good at the moment. If you compare the price back over the last 10 years, what you really need is some sort of change in the mood in the capital markets, so that people will start releasing the money that they've otherwise been putting into other things. But also if we get some sort of major pullback in the property sector, and they may seem like they're unrelated, it does affect moods in many markets. The Vancouver market has a sort of bit of a symbiotic relationship with apartment and house prices in British Columbia. And so if the investors in those type of areas feel like their house price is halved, but there's potential for the copper price to go up, they may not be ready to jump into the copper prices because they've they're mono-focused, as many people are in, the Australian market, the Canadian market, the UK market, on property prices. And I see a big retreat in property prices, frankly, and it's going to affect moods.
Okay, thank you. So as we go into 2023, what are you most excited about for next year?
Well, I would say the base metals and specialty metals. And by that, I do not include lithium. Lithium has been massively overhyped and overpriced. I see lithium coming back to somewhere under 50,000 a tonne, and it's been recently flirting with levels above 90,000 a tonne. So that's a big fall. But it's a fall because most of the lithium companies aren't using anything vaguely like 90 in their calculations. Some are using 20. So the price coming back, of course, affects moods, but it actually, if it goes back to 50,000, then all the lithium companies redo their economics at 50,000, their economics are going to look amazingly better. So you've got this sort of like strange dichotomy between sort of like a mood that's set by the price and then the realities that are set by the real price. And so it'll be interesting to see how that plays out, because many of the lithium stocks, of course, despite the $90,000 per tonne price, have been severely beaten back. And so probably we'll see some sort of equalization there with the prices of the stocks going up, bizarrely, as the price of the lithium is going down. But at the moment, we're sort of like in the transition phase where people sort of like have to detach themselves from crazy prices, whether they be crazy prices of lithium or tin or other things. But uranium could probably be something that we'll see a lot more excitement about in the next year. Okay, thank you, Christopher.
Finally, what do you think will be some of the key themes next year for the mining sector?
Well, what happens with the war? The war is a big factor hanging over PGMs, it's hanging over nickel, it's hanging over many of the metals that come out of Russia. What is going to happen in China? That is a major issue, because we've seen in the last week the fallibility of the Chinese regime. They may have a strong person in power, but if ultimately the people on the street dethrone that strong person, that could result in all sorts of scenarios. I mean, already people were seeing that the public demonstrations were actually positive for stock prices, because it might end zero COVID policy. And we're already seeing some sort of like glacial shifting in the zero COVID policy to try and de-dramatize the situation. And that could be very interesting, because China is a motor, but at the same time, I don't see the Chinese property market, which has been a big driver of steel demand and other things, going on the way that it's gone over the last 10 years. It's going to have to, we're in a big transition now, away from a retail, residential type focus into more of a, what are our industrial products? And the West has definitely had a big wake-up call, and there's going to be more focus now from governments on, in the West, on getting local production going again. And that could be a very seminal moment in particularly the US, which has basically allowed most of its mining industry to vaporize.
I think it's going to be a very interesting year. A lot of things you've been mentioning this morning, Christopher. We'll definitely have to get you back on the show as the year progresses. Christopher Ecclestone, Principal and Mining Strategist at Hallgarten Company, thank you for joining us this morning.
Thank you very much.
Stay tuned to Kitco Mining for more from Mines and Money.
Kitco Mining's special coverage of Resourcing Tomorrow is brought to you by Discovery Group,